Good morning, everyone, and welcome to another edition of the Forex Technical Market Update for August 10, 2015. Okay, I hope you all had a wonderful weekend and really enjoyed the time you spent over the weekend. And the markets remain pretty much the same as it left off on Friday, and that is in a consolidation pattern. We are in the middle really of the summer consolidation pattern. Now, not every summer we see the markets consolidating, but definitely this one is a typical consolidation pattern so far. Really, take a look at the euro versus the US dollar. You see that the market was had a huge downtrend earlier in the year. Then we had a slight recovery, and really since mid-May the market has just been really meandering, and the triangle that is developing is getting longer and longer. So, and this highlights one of the less glamorous parts of trading. I know everyone really thinks trading can be fast action and glamorous, but there are times when you're in the market that you analyze what is going on and you get yourself ready for the next major moves. Now, if you are a scalper, you would love consolidation patterns. But my personal trading philosophy is that I don't really scalp the market. I am a swing trader, and I look for large trends in the market. And when you are a swing trader or a trend trader at this point in time, the strategy is to analyze what is happening in the markets and also to get yourself ready for the next major moves, because when the markets do break out of these consolidation patterns, we more often than not see strong moves in the markets. And this consolidation reminds me of what happened in the British pound Australian dollar earlier this year. What happened, although this consolidation wasn't quite as long as what we're seeing, is that the market was in a triangular consolidation pattern for a number of days. Let's go back here. Triangle. Now let's go through the philosophy of this. Market pullback, and the market was in a consolidation. This was the 1st of April, so we see that this consolidation pattern really started in April. So all of April, the market wasn't really doing anything, and it's very easy for folks who don't know what they're looking for to get a sense of lull and impatience and say, "Oh, nothing is happening in the market, so let me just move on, okay, or let me look elsewhere." But if you position yourself correctly, you see that once the market broke out, and this is the breakout point that occurred, the market broke above the trend line, tested the trend line, broke out at 194.62, and the market essentially rallied up and up to the 214, the 215 area. So from 194 to 204, 214, over 2,000 pip move over the next couple of months. Once the market broke out in mid-May, we saw that through June and July, the market really rallied up to the 2014 area. So that's when you're a trend trader, you're looking for these strong moves in the markets that occur often when you're trading the Forex market. So moral of the story essentially is, do not be caught flat-footed just because a market is consolidating, because it happens all the time in the markets, especially the Forex markets. We see consolidation patterns all the time. So you just have to get yourself ready, and you have to be on the right side of the markets. And that's why I say, if you want to like join signals, this is the time to really join, when the markets are consolidating, and not when we have these breakaway trends and it's difficult to be chasing the market at this point in time. Okay, so Euro USD still in a consolidation pattern, and because it's in a consolidation pattern, I feel it's really holding back the major currency pairs. Because taking a look at the US dollar index, we are still in this consolidation pattern. It's almost a mirror view of what's happening in the euro. And a break in either direction will definitely give further clarity to where the currencies are moving. Taking a look at the Japanese yen was down on after the non-farm payroll report, but we see some recovery in the Japanese yen this morning, and the market is looking again to take out this 125 level in the Japanese yen. So the uptrend, even though we had a down day yesterday, sometimes just take a look at the broader trend. Broader trend is still to the upside. So if you're a trend trader, you still should be looking to be on the long side of this particular market. Similar to the British pound, Japanese yen market declined, but look, we're still in a broad uptrend, and we see some recovery this morning. And key resistance in this market is at this 196 high. If we do close above 196, we could see further gains in this market. And a key, before I move on, a key with the Japanese yen is that it seems to be mirroring what the stock market is doing. We're up on the morning in the S&P 500. And what we're seeing even more closely now is that when the stock market is up, the USD Japanese yen is doing well. And that correlation is getting a bit stronger at this moment. Just a side note to keep an eye out on. Taking a look at gold, we see that the market is up on the morning, and gold looks to be moving to the upper end of this channel like consolidation. I would say the market has to close above this candle here, has closed above 1109 level for the recovery to gain some steam. But if we do close below 1080, that will be very bearish for gold, and we'll see further declines. And please note, this time in the markets for gold is normally a time when we see strength in gold. So because we're seeing relative weakness in gold, that could be very bearish for the future of what may happen in gold. So that's definitely something to keep in mind. Seasonally, July, August is strong for gold, and all we're seeing is really a sideways movement in the metal. Okay, so that the other market of interest that's recovering nicely is the British pound, and after the non-farm payroll report, the market traded down to the trend line, as you can see here, and we are getting some recovery in the markets. The market also tested the low. You can see, let me draw the red line. Tested the swing low, and we saw that the market made a hammer and is recovering nicely. But the key area for the British pound is these highs. These highs up at this 156 up here, above 156. The market has to close above this level for us to see further gains in the British pound. And the thing is, the longer it stays below the level is the more worrisome the bulls should be. So the exact level, if we see a close above 157, we're at 155.45 now. If we see a close above 157, that would be fairly bullish for the British pound. A close below 154, this 154 region, and also 153.27 would be very bearish for the British pound, and we will see continued weakness, or we will see some weakness in this market. So that's something to keep an eye out on. Remember, it's a new week. If you would like to have the signals sent to you automatically, you can click on the link below this video to get started and not be caught flat-footed. Thank you very much for listening, and I hope you have a wonderful week and also a wonderful day.